What is seller financing? Seller financing is the same as owner financing. In this video, I'm going to talk about what is seller financing, when one would use seller financing, and what is the advantage of using seller financing. So how does seller financing work? Well, in traditional lending, the bank actually gives money to the buyer to get the loan, whereas in seller financing, the seller is extending a credit to the buyer to buy his house with a certain amount of down payment and certain terms and conditions. The best way to explain seller financing is via giving you an example. So let's assume there's a seller and he wants to sell his house for $1 million. The house is a little bit overpriced, but the seller will not go less than that price. That's what he wants. And let's assume that he found a buyer and the buyer is willing to pay the more price for the house, even though he could find something similar in the $950 range or the $925 range. But let's assume the buyer was willing to pay $1 million, which is typically the case when the buyer cannot get a loan from a traditional bank. The second option is seller financing. And when seller does the financing, the buyer usually pays more for the house or may pay more for the interest rate. So in this example, let's assume the buyer cannot get a loan from the bank. So the seller is financing it and he's willing to pay $1 million for the house, assuming he puts 10, 20, 30% down. So in this example, if the house is $1 million and let's say the buyer is putting 20% down, that means the balance of $800,000, the seller will carry a note for the buyer, and then the title goes to the buyer, or it could be kept on the seller's name. It's a negotiable item. And then the buyer pays the seller the monthly amount. Usually in this kind of scenario on seller financing, there is not a 30-year note. Although the payments will be done on a 30-year amortized or 20-year amortized mortgage, usually these loans, the seller carry notes or seller financing, are usually refinanced in 3 to 5 to 7 years, depending on how you negotiate. But a seller does not want to carry the note for 30 years or 20 years. You have to put a stipulation in the note or in the terms and condition that the buyer will refinance in 3 to 5 years, which is pretty typical. I just did a note or seller carry financing a few months back on a commercial property where the seller wanted a higher price. It was $1.2 million. The property was worth about $950 to $1 million, but the buyer was willing to pay 1.2 because he could see the development potential in the future. So he was willing to pay more. But because of the higher price and because he did not appraise, the buyer could not get a loan from the bank. So the seller ended up carrying the note for 5 years, and there was a stipulation in there that within 3 to 5 years, the buyer will refinance and pay off the balance of the note. So that's another example. So the question is, why would the buyer go with seller financing? Well, there's a lot of reasons. One of the typical reasons is because he cannot get a traditional loan from the lender or the bank. An example would be, let's say there's a buyer and he had medical issues and he had a lot of bills, and that shows up on his debt ratio, and he cannot get a house, but he really wants to buy a house. And maybe that he finds a seller who knows the buyer or finds out who the buyer is and understands the situation, that he had student debts or he had a bankruptcy or he had medical bills or whatever the reason. Maybe he sold a business and he sold at a loss. So whatever the reason, he has a lot of cash flow, but he does not have good credit, so the banks would not give him a loan. So in this case, the seller understands the buyer's situation, so he will charge him usually more for the property. He will charge him more on the interest rates, and the buyer understands that, hey, the buyer is not going to get a loan from a traditional bank or a lender, so he's willing to pay higher price on the purchase price of the property and higher price on the interest rate. At least he's buying a house because he or she wants to buy the house. So there's a lot of other scenarios, but basically seller financing is here to stay. When the prices go up, interest rate goes up, inflation is high, as we are in right now, November 2022, it is very typical where seller financing will be coming back. I just did a seller financing on a commercial property 6 months ago, and I have an escrow right now as we speak on another commercial property where the buyer could not get the loan because he did not appraise. The buyer really wants to buy the commercial property, and the seller has agreed to do seller financing because he's getting a higher price and he's going to charge the buyer 8%. So there's a lot of scenarios. This is some example. Hope you can understand this. If you have any questions, feel free to direct message and I'll be glad to send you some information.